Welcome, ladies and gentlemen. Commodity TV here in Zurich for the Zurich Invest Night, and we are at the offices of Zurich Invest now with McEwen Mining, and Rob McEwen is with us here, the chief owner of the company. And yeah, he wants to give us an update as we spoke the last time in January this year in Vancouver at the Cambridge House. Rob, welcome. Good to have you here.
Thank you very much. Happy to be here.
Yeah, thank you for taking the time and the opportunity. Always good to talk to you. 2017 is quite nearing to the end. We are now in November. We spoke the last time almost 10 months ago. I think a lot of good things happened. Maybe you give us a short overview of what happened in 2017 with McEwen Mining.
I'd be delighted to. We had a couple of things. One, we have a project in Nevada called Gold Bar, which we expect to come into, start production or construction of it this year. That permit's very close at hand.
Oh, wow.
And that's been a 3-year exercise. So we're very excited about that. We put out a preliminary economic assessment, an update on our Los Azules project. It's a very large copper project.
It's in Argentina, right?
It's in Argentina. And it's about 30 billion pounds of copper, 36-year life, a payback in 3.6 years. Very robust project.
Yeah.
And I have to translate it in for gold and silver investors, and they say, well, aren't you there? And I say, yes, but the copper we own 100% of, and if I was to turn it into a gold property, if you allow me some alchemy,
yeah, of course,
then I'll just say...
like gold equivalent.
Gold equivalent. The resources there would be 78 million ounce gold equivalent. 78 million. Jesus.
Okay.
So you take the gold price and divide it by the copper price, and you come up with an exchange ratio. So right now it's about 408 pounds of copper has the same value as 1 ounce of gold.
That's pretty big.
Right? So you take 30 billion and divide it by that, and you're just around, and add in the gold and silver that's already there, you get to 78. For the first 13 years, it's supposed to produce 114 million pounds of copper a year.
Wow.
Divide it by that 408, and you get just over 1 million ounces of gold equivalent a year.
That's the waste, right?
Exactly. And then if you look at the cost of $1.14 a pound for the first 13 years, you'd multiply $1.14 by the 408, and you're coming in with a cost of gold equivalent of under $500 an ounce.
Wow, that's outstanding.
And you've got a 36-year life.
Yeah, yeah.
So it's a very important asset. It sits in the company somewhat misunderstood because we're more gold and silver. But it is an asset we're going to push forward to put an application in for development of it at the end of 2018.
Yeah, and honestly, I really love it because I love copper because we have this development of e-mobility and we need much more copper in the future. And so I think it's a sensational diversification for your company. It makes things much safer.
Yes.
For the future. Yeah.
And then we just bought a mine in October called the Black Fox Mine. We bought it from Primero. They purchased the mine in 2014. They paid $300 million for it to buy it. They assumed $140 million in liabilities when they bought it. And then since 2014, they have invested another $120 million in capital expenditures and exploration. We bought it for $35 million.
No, really?
Yes.
That's fantastic.
We paid $27.5 million in cash, and the balance of the 35 was assuming some liabilities. It came with $150 million of tax pools that we'll be able to shelter future income from. It will produce, this year it's producing about 50,000 ounces. Next year it'll be between 40 and 50,000 ounces. Earlier in the year, we bought some properties. This property's in Timmins. Earlier in the year, we bought some other properties in Timmins, and we were looking where would we process that ore. This property that we just bought, Black Fox, has excess milling capacity, so we can truck the ore to there to put it in the mill.
That's fantastic, huh?
It has good exploration potential.
Yeah.
A lot of the mines in the Timmins area go down to 1.5 kilometers, This one goes down to 800 right now. So we are currently drilling below the known mineralization with the expectation we'll hit more, and there are satellite deposits around it. So that's all quite exciting.
Yeah.
We did an issue in September. Didn't seem to be received very well by the market.
Yeah, some people had a problem with that.
Yes. It was the first issue we've done since 2012, financing. In 2012, we did a $60 million rights issue that I personally backstopped. This issue came up fairly quickly because we started looking at this purchase we made recently. In late July, early August, we signed a definitive agreement in the end of August, and we had 1 month to pay. So the normal routes of financing, they weren't available to us. So we did the spot deal, but the market seemed to react stronger than I would have expected.
Yeah.
We issued 6% of our stock, and it went down a lot more than 6%.
That's right.
But the market's been nervous.
Yeah, but yeah, exactly. Markets are nervous on the one hand, and I would say maybe it was a lack of understanding in the beginning. Because when you tell me now the story, I would say, Jesus, very wisely invested money. Because you will make a fortune out of that in the future.
Well, we're hoping to do that.
Yeah. Okay, let's say we hope for it.
We have to put some more money in to give more working areas and more exploration. But
yeah, but I mean, you are totally debt-free,
we're
right?
debt-free,
You have over 60 million, I think, in cash assets. Yeah?
Yes.
So I think this is manageable for you, and you are generating cash flow. And this leads to my next question. Where do you see, let's say, the production for 2018, and what is your plans for the next years?
2018, we're looking at about 170,000 ounces. And that would be coming from Mexico, from Argentina, and Timmins. By 2020, we're expecting to be over 220,000 ounces. And again, coming from those three places. We think there are two other areas that will come on stream. The property I mentioned at the beginning, Gold Bar, that's in the permitting stage. We're expecting it will be operating on a full-time basis in 2019. And then there's a silver project we have in Mexico. It requires an $18 silver price. And we put it at 18 because I said, I don't want to build a project unless I can get my money back in 3 years.
Yeah, okay.
And I get an internal rate of return in excess of 20% after tax.
Yeah,
otherwise, I don't want to invest in it.
Exactly, but this would imply, let's say, all-in costs maybe of 12, 13 or something like that. Yeah, exactly. But okay, this is quite reasonable because this is like the oil companies are playing. They plan also like with $50, $60 per barrel because otherwise they say, no, we need some room for surprises.
Exactly. So we would... The base case is 220. The best case is just under 300,000 ounces by 2020.
Can you maybe elaborate also a bit on the cost situation then? Because I think with rising production, normally we say the AISC should go down or should go down. Let's put it that way.
In Timmins, the cost will probably go up because we'll be spending more money on development and exploration. In Nevada, that's quite attractive. All-in costs of about $850 an ounce. So that's quite good. Mexico, we have a gold property right now that is coming close to the end of its life, at least in terms of mining the oxide ore. There's a sulfide ore, but that'll require a little more capital. Argentina, all-in costs are under $1,000, and it's sort of steady state.
Yeah, so let's put it that way. As long gold is, let's say, above the $1,150, $1,200, you make a nice amount of money, right?
We're happy.
Yeah. This leads me to my last question. As you are paying a dividend, and I'm one of the few guys who love dividends.
You love dividends?
Yes, more people are on the growth side. They say, no, you have to reinvest all the time. I think it's important to reward shareholders with money and to remind them that you are still alive and that you make money, because then they stay with you. That's how I think. And as you are a real big shareholder, so for you, dividends is important because you get $1 salary, right? I mean, with $1 salary, you normally don't make a living.
I stretch that.
But I'm sure you're not struggling. But the point is, are there plans, let's say, everything goes the way you wanted it, everything works very well out, yeah, you can control your costs, maybe gold goes a little bit higher. Are there plans to raise the dividends also substantially, or the payout ratio?
I wouldn't look for an increase in dividends until we get these other operations up.
Of course, you have to get that done first, yeah.
When I was building Goldcorp, we got to a point where we started paying a dividend once a year, then twice a year, then quarterly, and then we started paying monthly. And I, like yourself, I always viewed that the dividend is a form of rent that you pay to shareholders, share owners, and as they're waiting for the capital gains to occur. And I very much subscribe to that view. That
Fantastic. Great. That's a great final sentence. Rob, thank you very much on that.
Thank you.
We wish you all the best and look forward to some good news out of your company, of course. And I would say keep it going, build the mine in Nevada, of course, and also with Black Fox, all the best. And I love the copper thing.
You love the copper?
Yes,
all right,
absolutely.
We'll be in electric cars together.
Great. Thank you very much.
Thank you, Joseph.
Yeah, ladies and gentlemen, it was Rob McEwen, the chief owner of McEwen Mining, and you heard it. Lots of good things are going on into the company. Los Azules is on the run, 78 million ounces if you recalculate the copper which is in there. This is a real big chunk, I would say, and especially they can produce something like, if we also go gold-based again, $500 per ounce with costs. This is a fantastic yield, as copper is supposed to be to go anyway higher. So also Rob has really diversified the company. Again, gold, silver, copper, all is in there. And also with on the Cortez Trend, the Gold Bar project is in the permitting process. It looks like the permit is coming quite fast and quite soon here. So this is future production for 2019. And with Black Fox, this is another great project. They buy it quite cheap. So I think the company is full on the run. Approximately, in the best case, 300,000 ounces within the next 2-3 years is manageable. And they did it right. No debt and paying a dividend. That's what we like. Check it out. Thanks for watching us. Bye-bye from Zurich.